Good morning, afternoon or evening, ladies and gentlemen. Where to even begin this one? I think a good place would be with the Bitcoin chart. We've got a lot to get into. We're going to be looking at a take from Lin Alden. We're going to be looking at a take from Tom Lee, who is rather unpopular right now. He brings up a couple of interesting points. One about this contagion really being caused by a number of things. He also brings up Microstrategy, which is coming under a lot of scrutiny. As they go below one NAV and other kind of DAT companies that are really based around performance of the digital assets that they hold are really coming under scrutiny. And also the MSCI has actually basically started the consideration of actually delisting from all major indexes DATs that have 50% or more of their company based on price appreciation of crypto due to stability concerns. I think this is going to get decided upon going into the end of this year and then implemented either way at the start. That would have some pretty bad repercussions. One thing that I do want to say is that now is not a time to panic. People selling here are selling at the wrong point. You should have sold before this move. Not at what could be the kind of trough of it. And Bitcoin is coming into some critical support, which we're going to talk to you guys about. And so are the altcoins. So most of our altcoins, 85% of the altcoins that I hold are actually still marginally in the green, despite everything. And it's been a very trying space for the altcoin sector that really hasn't seen an atypical alt season. I still do think that's to come. There's some very interesting, one of the most interesting charts right now is Bitcoin dominance, which we can talk to you guys about. But there is critical support coming in across the board, certainly with these altcoins also that are still elevated from their base. Let's start with the Bitcoin chart. This, for me, is still in an uptrend until it's not. And what is an uptrend? A concession of higher highs and higher lows. That is what a bear market is defined by. Or bull market. Not the time to get your terminology wrong here, Rupert. A bull market is defined by higher highs and higher lows. And Bitcoin today is still in that state. In fact, this is where you invalidate the structure if you take out the low of March earlier this year. Okay? That's where we'd be going. Right, now it's time to look for this as what we would look at as phase 3 and a broader downtrend happening. That has not been confirmed yet, and I still believe, despite everything happening today, despite the fear and greed index hitting 6, which I've never seen, that bright days are ahead of us. And we've spoken about our macro views for markets and how we agree with Mike Wilson from Morgan Stanley. We think a new bull is in for equities. And he did even give his opinion that late Q3, Q4 of this year, you were going to have some consolidation. Is this just consolidation for the equity market? Or again, the start of a more broad downturn? We think this is just consolidation, and we think crypto has been hit by this. We're going to look at a number of takes. Lin Alden's take, Tom Lee's take, which I know is quite an unpopular guy right now. We'll talk about strategy. We'll talk about the MSCI. And we'll talk about a number of things and try and give you the big picture and let you guys decide what to do. But I still think you have this good environment ahead of you, and I don't think the 4-year cycle is going to be followed. And I think BTC DOM for me right now is probably the most interesting chart, because you would expect it to be gaining ground here. It's not. Could be a number of reasons for that. The problem is perhaps internal with Bitcoin. It's the biggest capital, so there's more of it to sell. It's held by institutions. We are seeing, I believe, a wave of institutional selling over on Coinbase in terms of volume. There's lots of indicators right now, the fear and greed perhaps, that are kind of at a bottom where markets have typically rebounded. So look, you guys have got to make your own decisions up. I don't think selling into this, for me, I'm looking for an invalidation of this uptrend before we really start to flip and say, okay, now we need to be looking at broader downside, like a more sustained downside. This could absolutely still be a pullback in a broader uptrend. And we've been right 1, 2, 3, 4 times. We'll see what happens with the 5th. If we can be right on this call, certainly given the sentiment right now, you know, people make careers on that. We're not saying we're 100% going to be right, just it's our opinion that no structure has been broken. We are looking at things with the S&P and things like that, but I don't want to go into that. I want to start things off Lin Alden was on the What Bitcoin Did podcast, who I don't believe is now steered, I've not watched it in a while, but by Pete McCormack. I think it's the guy that he had working for him. He's doing a good job, clearly. He had Lin Alden on. And I want to listen to what she had to say. And then we've got a number of clips from Tom Lee and what he thinks is going on right now. You guys can let me know your opinion. BMNR, which I hold, is getting smashed. Our miners, some of our miners, we got into Coinbase so early that we're still doing very well on it, and some of our miners we're still doing very well on, but some of the others, my biggest miner, not so much anymore. You want to find out what I hold, do become a Patreon. But then we will talk about Microstrategy, or Strategy as it's now called. They're putting out a number of things, and interestingly, the 10th of October, when you saw that liquidation event, the MC or MSCI, which effectively, their business is providing decision support tools for global investment communities. This includes indexes, analytics, risk management, ESGs, and private asset data. So these guys will be... We'll look at what they're doing and how this might affect DATs and the ultimate narrative of crypto companies that are based around holding digital assets. If they're to be taken out of like the S&P 500, the NASDAQ 100, whatever it may be, then they lose that kind of passive flow. So there's a lot going on. Let's start with a clip from Lin Alden.
There's been pretty weak kind of just broad retail demand. The narrative has been elsewhere. And so the combination of pretty concentrated demand side stuff, kind of moderate liquidity situation, and then the ongoing pressure of OGs or semi-OGs selling into the strength is giving some weakness. The bullish part, I would say, is that there's no particular reason to believe that there's a 4-year cycle intact. We haven't hit euphoric levels this cycle compared to prior cycles. Therefore, there's less of a reason to expect kind of a major capitulation of sorts. I mean, that's, I guess, famous last words. But basically, you hit less euphoric highs. There's kind of less to potentially wash out. And I think as we return to a more pro-liquidity environment, and as some of the coins that were maybe held for the wrong reasons are already kind of evacuated, I think the cycle could go on for longer than people expect, because it's not driven by the halving. It's driven by broader macro and interest in the asset itself.
Very much agree with that take. I don't think this cycle has been atypical. I think if we were to describe this cycle, it's an unwilling bull market for crypto. And that retail kind of interest FOMO just hasn't been there really, certainly for the altcoin sector. It's been largely institutionally driven, which has its own ramifications. But there's definitely a camp that we're going to enter a more prolonged bear market here, typical with the 4-year cycle, and that there's merit to that right now. Doesn't mean that it doesn't change on a dime. Personally, I'm holding all my crypto right now. Yes, my valuation is fluctuating, but that's the reality of being an altcoin investor. We'll see. And I think if you get that reassertion and our thesis on the macro is right, you've got lots of charts that are consolidating in and around all-time highs. They're pulling back. They're potentially setting up structure. They reaffirm very aggressively. And actually, that could drive an epic rally. And I think that is a scenario that I'm definitely watching for moving forwards. And it would be fitting after retail has been demolished. It really broke my heart to see just how many people got liquidated in regards to what took place on the 10th of October with the liquidation event, which we'll talk about. Tom Lee gives a couple of interesting takes that I want to play with you, and then we'll continue.
Automated processes in crypto. One of them is called ADL, okay, and that's an automatic liquidation feature that would take place if someone's account or their collateral drops in price. It's essentially like a margin call. On a specific exchange, a stablecoin's price varied from other exchanges. Stablecoin should stay at $1. It dropped to 65 cents. But that only happened within the exchange quotes, within this exchange because of liquidity. That triggered an ADL, an automatic liquidation across many accounts. It wiped out, as that spread across other exchanges, right? Because liquidations cascade. Almost 2 million crypto accounts got wiped out, even though minutes before they were actually profitable accounts.
So who is behind this? Like, who's the they in the market makers and they got hit? Who's the they?
Well, Brian, I am aware of names, but because I'm not someone who wants to name names, I think what you should keep in mind is that this error is actually essentially a bug, a code error, because I think in retrospect, they would have pulled pricing from across exchanges to set the price for that stablecoin rather than rely on internal quotes. But this has resulted in a lot of market makers and traders having less capital. And as you know, as crypto prices drift lower because trading volumes drop, they need to then have more capital available, which means they shrink their balance sheet further. So this is then that reflexive.
And actually, it was certainly my belief that what took place with the largest ever liquidation event in crypto was caused by exchanges. There you have the kind of confirmation, and we did say we defined it as a kind of ripple effect. There was going to be a reverberation of that as damage had been done, not just reputationally, but also structurally to the markets, and we're still sort of experiencing that, as it were. And I think that's very much the case. Very critical levels coming into play here. Look, at a point, we're wrong on being bullish. We're not there yet. Doesn't mean that we won't end up there, but we remain bullish on the cryptocurrency markets. We don't think this is an atypical cycle. We think there's some internal things happening right now. We think the macro markets are consolidating and climbing a wall of worry, but we think there's brighter days ahead for them, and crypto will go in that direction. Meaning 2026 we think is bullish if you're in the right assets. Certainly if we've got this broader downtrend for BTC DOM. Let's see. It's never a popular opinion being bullish on a day like today, understandably. But I think that has a lot to do with what's going on right now, as Tom Lee says. And he also talks about kind of what he's expecting moving forwards and strategy, which is coming under a lot of scrutiny. The big one for me, and I can't believe I missed this, I actually think it was Rand from Crypto Banter that shared this, was the MSCI. And what they're doing as an advisor to kind of indexes and stuff like this, and they're potentially deciding whether to exclude from its global investable market indexes companies whose digital assets holdings are 50% plus of their assets. So that would exclude miners, it would exclude strategy and DATs, and there's probably sort of systemic reasoning for this. Let's listen to this second clip of Tom Lee. It's going to be a longer one today, guys, but I think it's warranted.
That's the low, and Ethereum bottoms at 2,500. The recovery from there to all-time highs will be faster than the decline. That's what happened in every crypto decline, because what you have is all this spooled up energy. People are sitting and waiting, and there's panic selling, forced sellers, but the buyers are being patient. That's what will happen. And again, you guys kind of hit it on the head. Microstrategy is probably the most important stock to watch right now, because that is the Bitcoin proxy. It's the most liquid name. It seems to me that when in the crypto world, when they're trying to hedge their longs in Bitcoin and Ethereum, they can't find any other way to hedge it except shorting the liquid stocks. So that's the MicroStrategies.
This is one of, if not the most important interviews I've done this year, and that's respectfully to every other guest we've had on this fine network and fine show, because I want to dive in a little bit deeper to what you're saying. That basically there's some kind of a software coding problem that's causing a lot of this. Let's bring up, guys, if we can, MSTR. That is the company formerly known as MicroStrategy, now just known as Strategy. The stock's down 50% in 3 months, Tom. It's down about 65% from its highs in the middle of July. It works, or people think they do, but inside that engine, there are gears, there are pistons, there are things that are occurring that for 99.9% of our audience, they don't do this for a living. We get it. This is a really important interview. I'm going to let you go, Tom. We are watching MicroStrategy or Strategy. We're watching Bitcoin, and we're watching possibly 77,000, which you think might be kind of a washout period, correct?
Yeah, that's right. Tom DeMark, who is an advisor to BitMine,
very well known
really
to me,
giving us a lot of insights. Yeah, he's watching that. Actually, MicroStrategy at this level here probably is when you want to ratchet into the longs, and Bitcoin maybe just a few $1,000s lower.
So we might be at a bottom for Strategy.
Yeah.
Okay. So yeah. 77,000. This is going to be your support here, and then you're going to get a relief. The problem is if you run this and you start to set up some sort of a head and shoulder or something, then you might have a broader downtrend. We're going to watch this and keep you up to date with it every single day, guys. Don't worry. Don't panic. If you're panicking right now, go and listen to Rudyard Kipling's "If" poem. It's a brilliant one. Maybe go and get it. I think reading it out yourself might not do it justice, but there's some great readers of it out there. Anyway. Yes, we agree with a lot of that. Microstrategy, we did say looked like absolute crap when it dropped below this. This should be, in my opinion, clear support. And yes, it's dropped hideously, but literally this is crypto. I mean, this literally is crypto. This is a 50% drop. This is going to be way more severe. 68%. With crypto assets as a kind of paradigm shift for traditional, which is why I'm very lucky to be and have been in this industry for a long time, because we're going to have the information and experience in it. There's a paradigm shift from traditional assets. There is a consolidation with traditional assets right now. You can see this, but I think it's akin to something like this or this, and it leads to higher prices. We've given you our technical reasons as to why we believe the S&P is in a new bull market and crypto should appreciate with that. He mentioned strategy. They put out this. Seems like a little bit of panic control. At current BTC levels, we are 71 years of dividend coverage, assuming the price stays flat. And any Bitcoin appreciation beyond 1.4% a year offsets our annual dividends obligations. Okay. So a little bit of damage control. This, I believe, was posted from, I think Crypto Banter posted this, or ran from Crypto Banter posted this. The title, Extension of the Consultation of Digital Asset Treasury Companies. This is the date, 10th of October, 2025. Key points. MSCI is consulting on how to treat companies whose primary business involves Bitcoin or other digital asset treasury activities, including cases where capital raised activities are used mainly to accumulate digital assets. MSCI proposes to exclude from its global investable market indexes companies whose digital asset holdings are 50% plus of their total assets. The consultation period is open till the 31st of December 2025. Final conclusions are scheduled to be announced by January the 15th, 2026. Any resulting changes would be implemented as part of the February 2026 index review. MSCI also publishes a preliminary list of potential impacted securities that meet the proposed requirement. This would have big effects for miners, for DATs, for things like this, because they would then no longer be able to be put into indexes. S&P's an index, NASDAQ 100, whatever it is. And I think, there's kind of volatility concerns that are probably driving all of this. There is a lot of institutional selling out there, but I do want to remind people that it's always darkest before dawn. And for me right now, and I'm not going to be popular for saying this, Bitcoin remains in an uptrend until broken. And Ethereum is literally just ran into an all-time high and pulled back. Once there's a reassertion, you then enter price discovery. And I think there's a few assets that are in the exact same boat here or in the exact same situation. Ladies and gents, I'm ultimately still bullish on crypto. And I think that's not an easy thing to hear right now. I have a portfolio, as do you guys. The fluctuations in my net worth are substantial, to say the least. The kind you don't want to tell your partner about or family. Christmas coming up, how timely. I'm sure we're going to get asked about a few things. My phone has been blowing up, but we remain bullish more broadly on crypto. This is a storm to be weathered. That's it from me, guys. I'm going to love and leave you. Let me know your thoughts in the comment section. If you feel like you need to vent and get some anger out of you, by all means, if you want to use it for that, it's up to you. I'm going to love and leave you. Hang in there, troops. I'll see you all in tomorrow's Daily Market Update.